What's going on YouTube? It's Raj here from your average traders. Thought I'd do an update here today to to update on the average trader portfolio. It's been a pretty tough year so far with this persistent downside, and it's the crap continuing to get shat upon. We're just seeing continued weakness, like 5-10% moves lower, when you just think, all right, this has got to have hit a floor, and then we've just seen another 8%, you see another 10%, another 5% in some of these dog stocks. And the name of the game is interest rates, interest rates, interest rates, interest rates. The Fed have become more hawkish, and I think the forecast now is for around 3 to 4 rate hikes this year. I was looking at 2 at the beginning of the year, but now we've seen even the most dovish members. Kashkari came out saying 2 to 3. We had Harkin talking about 5 rate hikes. So we got the Fed in full inflation aversion mode and looking to raise rates and take away this ultra stimulative monetary policy. And this is now seeing the market repricing for this scenario. And the question is, has the market overdone that? Now, on an index basis, it doesn't look like we've really had much of a correction, but beneath the indices and taking out these large caps like we already spoke about, we're seeing an absolute destruction, especially in these growth stocks. We've seen companies being re-rated from trading at 50 times revenue, which was ridiculous in the first place, but now trading at around 10, 5 times revenue, 10 times revenue. So we've seen a big re-rating. Now the question is, where does it stop? What is it? You know, the market always overshoots. So the question is, do we just jump in now? Well, we're in the beginning of earnings season, and the banks have not started off this season well. We've seen JP Morgan on Friday report, which wasn't that good. It was down over 6%. Again, another 4% today. We went from over 170 to trading just above 150 now in JP Morgan. We had Goldman Sachs. Goldman Sachs missed EPS today. I've never seen that. I cannot remember the last time Goldman Sachs came short on EPS. But like they're saying, their CEO on the conference call today after their earnings are saying they're seeing inflation in every asset, everywhere, real wage inflation everywhere too. Their compensation and benefits were up around 31% this year. So we're seeing these big moves of these banks. So, I mean, this is where a lot of these things are happening. In Europe, we saw the Bunds almost go in positive territory for yields. I haven't seen that in God knows how long either. So let's have a look at what the portfolio is comprised of at the moment. So if we look at the log, so I haven't actually entered a trade since the 10th of January. So we'll look to see how the market trades today. Trade this week and look to put on a couple more positions. But unfortunately, I did close my Baba Iron Condor just before that massive move up, that $10 move up, which saw Baba trade back into the 130s, 132, 135. I think we went to a high of 137. It's now around 130, but it actually closed perfectly within that Iron Condor band, but I did take a slight loss, just a $9 loss on it. But at the time, I wasn't sure, just rather played it safe. But again, it did not work out. But with the positions I got on now, DraftKings, GGPI, which is the Polestar SPAC, Robinhood, C Limited, Sofi, and USO, they're all pretty much pants at the moment. But let's just go through them and see if we've got any hope for any of them. For DraftKings, that's got expiry in 10 days time. We were looking at the 26-28 bull put spread. And if we look at DraftKings, we broke this sort of support. I was really hoping it would hold 25, and today we dropped another 4%, trading at 22. Bear in mind, in September, we were trading at close to $65. So this is pretty much giving back 65% from the high. Now, the question is, I still believe if we have a couple of good days in this market, and especially in the small cap stocks, we can easily see a 10-15% rebound in a lot of these names. And the 10-15% rebound would just take it back up to 26, 27. So hopefully that will put it back in the range. Given how much it's fallen and where it is now, well, I wouldn't be surprised if we did it, but if not, we took on this particular trade $65 in credit, 135 is the max risk. So it was basically a 1-2 play. If there's an opportunity to roll this spread, maybe I will look to do it. But we've got 10 days, so we'll see how that works out. Polestar, that's been sitting here at about 11.20, 11.30. It's underpinned by the actual SPAC price of $10. So I don't think that's going to be going anywhere anytime soon. But hopefully we do get a rally coming towards the end, mid-February. So for Robinhood, that is the ultimate of the dog stocks. I mean, I don't think there's a better definition of garbage than this. But again, I was hoping from a high of, look at that, just after the IPO, above 80. Then it settled back towards, in the 40s range for a few months now. Since then, we're now trading at $14.40. We're down 60% from the IPO price, about 80% from their all-time highs. Another terrible day today, down another 5%. I went for this trade purely because I saw a lot of consolidation around here, and I thought we might start forming a saucer, and purely on a beaten up play, just a rebound play. But clearly, as long as it ain't zero, it can still go down. So it's at 14.40 now. Expiries at the end of this week. To be honest, this one just it's pretty much a loser. There's not much I can really do. I'm going to see if I can do some type of roll for a small debit to see if I can rescue it in any way. But to be honest, it does look like it's toast, this trade. But there's 3 trading days left. You never know. If you get a 10% rally, 15% now, put it back in the money, and might not be as bad as I fear it is right now. But either way, the trade risk is capped, so it's not too, it is what it is, and we'll make it back up on another trade. So for Sofi, here we go. So this trade, I put on the 12.5, 10.5, Feb 25th bull put spread for $70 credit, $130 risk. Now, the thing is, this spread was looking good. We've still got time for this one. We got over a month. We got 5 weeks of the expiry of this. But today we had a huge move down in Sofi. We actually moved down over 8.6%. And it took it below the previous support, which was around here, which was about 13, just above 13. And then we've been hovering a bit below that, and then we took it to just above 12. But finally, we got that news after the close that they got their banking license, which has been, rumored for so long. We've seen so many press reports regarding that, and the market has taken it positively. Thank God. It's up 16% after market, trading at above $14, making this spread look in good shape as of now. So the question is, we need some premium to sort of come off on that. We need the IV rank to go down a bit. IV is elevated across the board. So if we get a bit of IV contraction along pretty much a lot of these names, we could see some of these spreads come in, some of these trades come in, and hopefully you can just take some profit on them. So in this particular one, we're now looking at $14.01 after hours. Let's see if we can hold them gains, or is it just an excuse to sell off again? I don't know. But to be honest, out of the trades that are on right now, this one is looking good. So I'm not too worried about Sofi. Oh, SE, that is one that I missed out. That one I put in an Iron Condor. And if we actually look at SE, I put on this trade after Tencent did sell their stake, and we had this big move lower in SE following that. So this was the move. This is when Tencent did the announcement. We traded at around 200, and I thought, here we go, double bottom. Maybe we can find some support there, because we did have support there back in May as well. So that was a support from back in May, and then we did not really hold to form. That actually turned into resistance as we did make that move back up, found resistance, and it came back down again. And now we're trading at this double bottom level here at about 170. Now with this trade, we do have till Feb the 11th. I did a 190, 195 put, 250, 255 call for 225 credit. So there's still time for this one to move back if we get some type of move back in the market, but it's tough to see it at the moment with the current way that we just need to find some support, and generally it will move along with the market if we do bounce. But if not, considering I did take in a big premium for that $225 credit for 275 risk, I will see if I can roll down the whole iron condor for a little bit and then give it a bit more life, and hopefully give it more of a chance but the thing is that we've come off so much. I feel like we have this oversold level, so if it does bounce, just like I've said with the other ones, we could move about 10%, which will take it back to around 200, close to 200. So this is what I'm looking for there. And finally, for USO oil, that's one thing that has been going up while the market has been hit. Oil has been going up. This extra cold season in the Northeast especially is pushing up energy prices. I did do the 56.5, 58 call. So that's supposed to be put spread. Sorry, that was a call spread, a bear call spread for $70 credit for an $8 risk. So that was almost a 50-50 play. We have till Feb 11th, but we look at the chart here. We had the previous top back in October. I played for a double top over here, and plus, we from the low, we're up almost 25%. So I was just looking for a pure, some type of pullback from this big rally we've had from December, pretty much. So in the last month, we've rallied 25% in oil and USO. But this rally does not seem to be abating. We traded a little. We had a little red candle here. Now we've gone up even more. And in the post market, we're up another percent to 61.60. But the thing is that we saw this. This is the previous trade I did. I actually did this in October, and this one worked out perfectly. So we just need to see this round off a little bit. And I think with the pressure now of high energy prices, I do feel that there might be a little bit of political pressure to sort of help drive this oil price down. So I am looking for some news in regards to that to help push the spread down. But we have about 2.5, 3 weeks on this spread, so there's still time for it to work out. So we will keep you updated to see what actually happens with that. But yep, so this is the summary of the portfolio so far. It's not going that great this year, but the thing is, the year is still young. It's only January 18th. We're only halfway through the first month of the year, so there's plenty of time for markets to rally, for strategies to play out. So there's no real dramas or anything like that at the moment in terms of the positions. And the thing is that most of these positions, they're all capped. They're defined risk. So, I'm not too fussed. I'm not too worried about the portfolio right now, but we'll see how it all works out. But that's it for today on this update. We'll be back with you soon with another pod. Good luck with your trading, and we'll catch you on the next one.